Welcome back. Now, it is custom for Valentine's Day to spark a surge in demand for high-end goods and experiences, resulting in investor appetite for luxury goods, travel stocks, and memorable experiences. And joining me to unpack her picks or not for the Valentine's basket is the head of investment research at FNB Wealth and Investments, Chantal Marx. Now, Chantal, we put in all these stocks in the basket, but I don't know if all of them should actually be in this basket. Let's actually start off with Pandora. I think this is one that not a lot of people have spoken about recently. And actually, so I'll tell you just my view of Pandora. I didn't know about Pandora before the influencer age. So I think they just started being on my feed, on my social media feeds about 2 years ago. And now every influencer has a Pandora charm or a watch. Just talk to me about what characterizes that company and that stock.
Yeah, so I think what stands out the most for me about Pandora is it's not a hard luxury in the sense that you're paying thousands of dollars or thousands of rands for a piece of jewelry, but it's also not really that fast fashion kind of jewelry that you'll pick up at a Zara.
Yeah.
So it's something in between. So they do use cheaper gemstones, they use lab-grown diamonds, they use crystals, they use that kind of thing, and they do use sterling silver and they use some gold as well. So it's a little bit something extra, but it's not going to break the bank, and that's an important thing that the company also believes it is positioned in a very sweet spot between being fast fashion and being just way too expensive to afford. And that's why I like it as a Valentine's Day pick, because I mean, you don't want to necessarily break the bank. It's February, right?
Yes.
I mean, if we think about February, we just got through January. February, things aren't looking much better. It's a shorter month, but it's still very tough out there. So something a little bit in between maybe works for me. And yeah, a very strong management team. They are strategically know exactly where they want to go, where they are playing. And they do some really cool things aside from just the charm bracelets. They even have kind of these architectural looking jewelry sets, or these sets, not necessarily sets, but they've got architectural jewelry, so something a little bit different that they also put towards the market. And then, as I mentioned, really in that lab-grown diamond space, probably one of the bigger players.
It's quite interesting that you say that they are in a sweet spot, that they obviously not as expensive as, for example, the companies with the mined diamonds, because they do grow these lab-grown diamonds, but also not really fast fashion where you put them in there with Shein. So yeah, it's going to be quite interesting. But also, I mean, also the fact that they are known for their charms and their watches, and now they are just trying to diversify their offering, or maybe just put a spotlight on the other offerings just outside of the ones that they are known for. Let's actually go into the luxury stocks then, the ones actually with the mined diamonds and the ones that appeal to the higher income consumer, and those would be Richemont, your LVMH, your Hermes, that just came out with results today, beating on earnings. We've actually had quite a mixed bag of results from those luxury stocks. Of course, China remaining one of the important geographies there where it is still struggling. What do you think of that, dude? Because for a long time they were struggling, but are we seeing some signs of a turnaround in that luxury space?
Yes, so I really do think so. I think from a China economic perspective, I think we can start seeing the end of this tunnel that we've been in since COVID-19. And you have to remember that even though things have been tough in China for the last 3 or 4 years, the reality is that it's still a fast-growing economy with a rising middle class and a rising higher income segment as well. So the addressable market in China is still growing for these kind of high-end luxury players. And I think it kind of depends on also where in the market you were over the last few years. So Richemont saw a bit of a dip in watches, but high-end jewelry and branded jewelry in particular has continued to expand quite nicely. So that really has helped them. Hermès is like a Ferrari. It just there's just it's uber luxury. They're very highly specialized, and the demand for the goods actually outstrip the supply all the time. And it's the business model is actually built that way. With a Ferrari, for example, they know they can sell a lot of supercars if they've got a new supercar out, but they only make 799, and it's usually pre-ordered years in advance. And Hermès does the same thing with their handbags. Pre-ordered, they choose you. You don't choose them. And I really like that. But unfortunately, the valuation kind of already reflects that. It's a very expensive stock. Again, very similar to a Ferrari. I'm just talking about Ferrari a lot because it's usually red and it's the month of love. But yeah, I think Richemont's also probably a little bit on the expensive side right now. So I actually would be looking at LVMH because they've really lagged over the last few months. And yeah, I could see a comeback from the Chinese consumer. And I think LVMH, probably from slightly cheaper kind of priced goods relative to a Richemont's branded jewelry basket, could benefit from that.
Well, let's get into experiences. And also, interestingly, Airbnb came out with results today, profit-beating results. But I mean, also, we have seen, say, good numbers from your Sun Internationals. And I'm wondering if these two, kind of the traditional hotel counters and also Airbnb, are proving that they can coexist.
Oh, absolutely. Because I think that the important thing to remember is that Airbnb has a very specific niche, right? So they are looking at kind of these apartment style self-catering rentals. But if you look at a platform like Expedia or like Booking.com, they actually look at hotel prices as well. So it's really kind of democratized that space. And when you're planning a holiday now, yeah, you'll stay in an Airbnb for a couple of days, but if there's a really decently priced hotel out there that's giving you the 5-star service or the 4-star service, why not mix it up a little bit when you are traveling? So I think it's changed a little bit in favor probably of the traditional hoteliers. Sun International, I think, is just so interesting because the share price has been under so much pressure, a lot of speculation that the Piedmont deal isn't going to happen. But I think even without the Piedmont deal, it actually looks better because the balance sheet is a lot cleaner. And I think there's been a notable shift post-COVID. People want to travel. And with social media pushing the travel narrative as well, I can't see that stopping. And South Africa as a travel destination continues to make so much sense. We continue to see more international tourist arrivals. Domestic travel continues to pick up. So yeah, I really like Sun International. Airbnb is a stock that I also love. It's just now, again, a little bit on the expensive side, particularly after the big rally today.
Well, thank you so much for your time and really shedding some light on that Valentine's Day basket, Chantal, hoping that you and our viewers will be treated to an experience either at an Airbnb or Sun International hotel with some jewelry. That was FNB Wealth and Investments' Chantal Marx.